I guess one of the reasons why I wanted to have this digital panel is because one of the new trends is boards are asking for tech gurus, board members, or people who are very highly e-commerce.com competent, or I don't know what the word is. They tell me that, you know, as soon as I speak, they can tell that I'm a baby boomer and not in the loop. So don't use my lingo, but you know what I'm saying. And I guess you're assigned to the board of Bengati, a real estate company. And maybe can you talk to us a little about that, and why did Bengati decide that, hey, we don't need real estate competence, we need actually technology competence on our board?
Yeah, look, I'm starting to see this phenomenon across a lot of developing markets, and specifically more, I see it in the region, specifically in the GCC. There's a couple of reasons. I'll come to Bengati in a second, but I think the region is in a transition period. Most of the economy in the region historically has existed supported either by public sector or by family groups. And it's a very traditional model of becoming a franchisor of certain brands, you know, maybe operating some malls, and then basically creating a bit of a moat around their business by having exclusivity to this territory. Whether you're a car dealer, whether you're a bottler, whether you represent luxury brands, etc. That's changing because two key factors. One, UAE is no longer a mysterious kind of dangerous market where you don't know how to go to as a global brand. I think this was kicked off by Apple, and then from then on, you know, they want to have their own brand, they want to have direct access to the market, and that's going to continue. I see a lot of struggles from families that either have the brick and mortar and the mother brand wants to keep the digital, or they just want to take it all at this point. So I think it's a certain ticking bomb for a lot of these families to kind of innovate, come up with their own brands, etc. Two, again, because it's a model that, you know, there's a lot of money in the region, there's economic hardship, there's going to be a lot of more interest to come here. Most of these businesses have afforded the luxury to be very traditional in their approach, and then haven't had maybe the right level of investment in technology, innovation. Some of them have been newer to the game, some of them are a bit later to the game, and it's very tricky to catch up if you are not playing this game. So today, if you go to Saudi, who's the biggest e-com player? Anybody?
STC?
E-com player in Saudi.
Maybe they need more coffee,
Temu, followed by Shein. These are the guys that are moving markets in Saudi. It's not the local company, it's not even Amazon, it's not even Noon. I would estimate probably the business size of Temu to be almost 4 times Noon in Saudi.
4 times?
Yeah.
Wow.
So the risk might come from a very unpredicted area, and hence why being aware of this in time is important. And then figuring out how you can, and then there are some brands that have done it well. The second thing is, I think, also the aspect of independence. I allude to Bengati. Bengati, like a typical family, is run by the family. It's the father and his kids. And when it comes to raising money in public markets, when it comes to investment, joint ventures, most of the investors would like to see independent board members as a start. As a must, actually. It's a must to say, look, it can't be just father and sons. Recently, Bengati, which enjoys a very, very healthy financial statement, raised their first sukuk in a public market, and although their financials are incredible, the one demand from the investment bankers is you need to get independent board members. The second thing is, if you're going to get an independent board member, might as well make it count. Make it as somebody who will help you increase your multiple, make the company seem more tech savvy. And Bengati is a great example because they're real estate. They do real estate very well. It's one of the more traditional businesses. But this aspect of having an intelligent business, shifting from dealing to agent to direct sales, optimizing the way they are integrated. Bengati is the fastest developer in the region. They're the only developer I know that got sued for delivering ahead of the schedule. Which is you know, something to be proud of, but at the same time it doesn't come accidentally, right? Like, you have to build in a lot of tech and integration into that. There's also kind of unifying your whole supply chain. So there's a lot of benefits to it. I say like adding tech into anything is like cinnamon. It just makes everything a little bit better. Just tastes a little bit better.
So I was just sitting with the patriarch of one of the big families, and he was saying that the Chinese are, up here, and the rest of us are down here in terms of this kind of tech race and this e-commerce piece. And I guess that's what you're kind of giving us a shot across the bow to say, yeah, actually the Chinese are the ones who are leading by over 400% in Saudi.
How many Chinese car manufacturers in Dubai today?
How many what, sorry?
Chinese OEMs or selling cars on the street, selling with agencies and operating here.
Selling cars.
35. So I think it's one of those things, unless you're deep in the industry, like if you're auto, if you're a dealer, and you feel it first, and then you investigate it and you find out why. And this is going to continue across all sectors. So, and their business approach is very centralized, so they take advantage of all of the, I would say, GCC advantages of having long-term planning, single decision maker, investment in capital, intertwined public-private sector interest, but they also have the advantage of tech first, low cost, and quiet operation. They don't make a lot of noise about what they do, but they do it quietly and it grows quite statistically. So this is just one, not to pick on, I think, the Chinese, but I think they're doing a great job, and you can pick any sector, whatever sector you're in, and I'll name you stats that will probably shock you in terms of how much has your grip on the market slipped probably in the last 5 to 8 years.
Well, that's amazing. So I guess we should be looking for not just tech board members, but Chinese tech board members.
Not necessarily. I mean, I think if you have the tech insight, I don't know if the Chinese are going to give you the solution, but I think being aware of where the shift is happening is quite relevant, because there's other threats. There is now, with social media, the advent. There's new brands popping up with very low overhead, whether it's you are in cloud kitchens, or whether you are in operating a retail brand, clothing store. The top selling eyewear in the UAE is run by an influencer. It's not where you typically think the money is moving. And by the time you realize, it might be too late. And I think this is why having your finger on that pulse is very relevant, and also understanding how you can order something from Temu. You can order a toothpick from Temu. It'll get delivered from China. You might not like it and return it, and they'll take it back. So it's a completely different supply chain to what you're used to, and therefore I think it's more complicated than you think to be able to pivot your business to be able to operate that. Yeah.
Great. So maybe I'll bring it back to Wael, and you have maybe tell them a little bit about Edenred, because I think traditionally you weren't a digital company. So just so people understand what your digital products and service are, and maybe number two, what should boards be doing to drive that digital innovation and to make sure that digital innovation is profitable and they're able to monetize those opportunities?
Correct. Honestly, 3.5 years ago, I knew nothing about banking at all. And I was interviewed for this job. As a CEO for the Middle East. And the first question they asked me, what do you know about fintech? I said nothing. I eventually got the job. And just a quick background, Edenred is a French company since the 1970s. It was Accor, the hotel group. And the founder actually created a voucher for meals for his employees. So it was like a daftar, yani. It was a small, it's like a booklet. So I give my employees a voucher for them to have a meal. And then we digitized the voucher. It became Accor Services. And then it became Edenred. And now Edenred is like 10 times bigger than Accor Hotel. We got spinned off, and we operate in 46 countries around the world around prepaid, earmarked money, earmarked which is fuel cards, meal cards, tolling, EV stations, and here in the UAE, we actually run a very different business, which is, I keep on saying this, incredible statistics. There are 10 million people that are working here, 10 million people live here, 7 million are in the workplace, 5 million have a salary less than 4,000 dirhams. And out of those 5 million, they can't afford to open bank accounts, and technically we are their bank. We have 2.5 million salary cards in the UAE. And the model is B2B2C, where we actually knock on the doors of the corporations, we get the CFO to transfer the money into our bank account, and then we distribute the money in a salary card. And we don't make money out of this. We make money out of value-added services to the consumers, which we call the C3Pay champions. If you come to our office, we'll have pictures of them on the wall, because people who earn 400 dirhams and 600 dirhams are our top clients in this part of the world. We make an incredible amount of money, and we add an incredible amount of value to them. But back to the Chinese, because it's very interesting that Faris talked about, at one point in time, Ant Financials was the largest money market fund in the world. They had 900 million people on the Ant Financial is Alibaba Pay, Alipay. And there were 7,000 employees running the whole organization, with 800 million people on the platform, getting loans and so on. And they had this concept called 320. 310. That you fill in an application for a loan in 3 minutes. You get approved in 1 minute with 0 interactions of human beings. And if you look at the fundamentals of this, it's actually very interesting. In any business in the world, and back to your questions about what should board members do, in any business in the world, there is value creation and value capture, which is pretty theoretical. Everyone knows, every founder knows the business model. The business model is actually what is the theory, which is value creation, value capture. But on the operating model has been disrupted. It has to be a digital operating model. And if the Bengati family did not believe that they had, they have to be a digital company that happens to have to do real estate. And I think this is the beauty about the Chinese, is that they built the digital operating model from a data API point of view as a digital first that does cars, that does e-commerce, and I think it comes from the top, from the founders of the organizations and the board members, that they have to convince. I sit on 2 boards. I used to sit on EFGRMS in Egypt, which is a buy now pay value, which is one of the buy now pay later companies, and it's a completely sort of banking, something that I didn't understand. But then again, they brought a lot of expertise from digital, and they became the largest buy now pay later provider. I also sit on the board of Abu Dhabi Islamic Bank Consumer Finance in Egypt, and the amount of people that these banks are servicing is just out of this world. Primarily because of e-commerce, and primarily because of, in Egypt specifically, the dreams of people are like this and their income is like this. So the buy now pay later concept or consumer finance concept is literally taking the whole country by storm. I think board members and founders, if they don't believe that they're digital first, they're going to be disrupted. And even if they are not going to be disrupted, they're going to suffer incredibly hard over the next couple of years. And we're not at the turning point. It's beyond the turning point. It's really beyond the turning point. Whether you're in the car business, whether you're in the real estate business, if you don't ingrain the digital operating model as an AI factory in your DNA, you're definitely out of business.
So you're saying irrespective of whatever industry you're in, business you're in,
You're
you have to say, I'm a digital company first,
100%.
or you're dead meat.
100%.
I would add to that, even if you're looking at an exit, like the multipliers that apply to anything digital is significantly different than a traditional business. So exit-wise, if you're trying to get a loan, if you're trying to get investors at a valuation, it completely changes the formula.
Right, and so a lot of these boards then, I mean, obviously we have family businesses, these are generational business. I mean, one of my clients was founded in 1866, so, there's obviously an old guard on the board. So you feel that this is a major risk unless they have to quickly jump on the bandwagon and get digital.
I agree. Yeah.
Can you, maybe we'll ask the $400 million man who's living in United States
I
of
wish I was
Abdulaziz
a
Al Ghurer.
$400 million man,
Sorry?
but yeah. I
You
would
have
not
to
be
do
here,
it while-
Shane, for sure. If I
Pardon?
was a $400 million man myself, I won't be here.
So what do you feel? I mean, obviously you've done it. You've seen, well, it looks like the outside that, hey, there's like this opportunity, but in reality, the fintech space is quite crowded. Everybody and their dog has a fintech play that they're pushing out there. You're one of the few that were able to ride front rank, take the checkered flag, and obviously part of that, we always have a saying in executive search that CEOs cannot succeed where boards fail. And so I would imagine your board has empowered you and has done certain things. Can you maybe speak a little bit about what these boards need to be doing in order to be successful in this innovation?
Sure. I think, a lot of pertinent points have already been made, but some of my thoughts, especially coming from a tech, fintech space, running a company myself, I think, everyone has heard about it. We are in the probably fourth industrial revolution, maybe jumping to the fifth, where there's so much data, AI, right? So that's the part and parcel of our lives for companies as well as the consumers. Over and every year research is published where your consumers are looking at more digital means, social means to choose the brands, their preferences, their friends, etc. Right? So it's no longer a choice, as everyone is saying. Now, when there is so much noise around digital transformation, my belief is for the boards and the leadership, what is important is how would digital transformation help you drive your current business, right? How does it impact what's happening today and what would happen in the future, right? So the board has to be, along with the CEO, keeping an eye on these are the trends that are impacting my current business. So how do I invest in digital transformation, etc., and what my business would be in 4-5 years down the line. Once you have identified that, I think the next step is whether the company is set up correctly to take this change or to drive this change. By that I would mean from a people perspective, from a processes perspective, and something that's absolutely critical, which is not given too much focus on, I think, is culture. Because I think changing a culture in a company to think more digital, to think more new age, is very, very critical. And you see banks that are succeeding. I'll give an example of Mashreq, and there are a lot of other banks. But if you see Mashreq, the way we have transformed in terms of the kind of people that work in Mashreq now, most of our teams are developers, right? Any new age bank that you go to now, product squads are no longer just, your boring bankers, but we have front end developers. We have these new age folks who understand business and tech together, right? So once you understand that, how can you keep company ready to embrace this change? And I think that's where, the board plays a big role in terms of identifying what are the key levers, where do you invest in, do you have the patience as well as the courage to make those changes, right? Because sometimes those changes could be completely different to what you have done for the past number of years. So I think that's where, boards play a critical part, and that's where in a lot of places you need specialists who help you take those decisions, who have seen it in other businesses, and they can bring that into what's happening. I think another point which is missed at many times is that while you are doing the digital transformation, there are risks that come with it, right? The risk of cybersecurity, for example. So all those things come hand in hand, and I think there should be some focus on this as well from a board perspective where you have advisors, independent members who can add value not just in getting operational efficiencies or driving revenue, but mitigating some of the risks that come with it, because these risks are absolutely real.
Right, right. Well, from an executive search perspective, I mean, we've watched the boards kind of initially they wanted to hire, a chief digital officer, chief technology officer to drive cost efficiency, digitize operations, and then they started to realize, oh, we need to have digital products. But then you could also see that the org structure didn't match because you're launching digital products, but you don't have a digital marketing team or you have no digital capability in-house. And now I think they're coming to the table and they're saying, oh, we really need to digitize the front office. We need to digitize our products and services. And obviously, one of the key areas where they fail is not having a digital marketing or online sales and marketing capability. A lot of people, I think, we're here talking about the success stories, obviously some of the most successful companies in the space in the GCC today, outside of the Chinese ones, which maybe we'll get next time. But, a lot of companies are failing. They're launching digital products, digital services, and it's a complete fail. And I've actually talked to a lot of VCs who have, 5, 6 platform companies, and they're just hemorrhaging cash. You guys, on the other hand, have been very successful in launching profitable online services and products. Maybe can you give us some examples of where you've seen these products from concept through to profitability, and what's kind of that interaction and input from the board to make sure that we cross that line?
From our point of view, we started digitally, right? So we were lucky that we started digitally, but then again, you build a monolithic big system. We are, I don't want to say this, I hope there are no regulators in the house, we are a bank. We are a bank that is not licensed, right? So if you come to our office in the morning, you'll find people complaining about their ATM is not working, the transfer to their moms in India hasn't reached. So people come to our office to almost think that we are the front end, but we're not the bank. We're never going to be a bank. We actually have digital services, and we treat blue-collar, 5 million blue-collar people in the country as VIP clients. Let me give you a couple of examples, right? We've completely changed how we physically sit in the office. We don't have a HR department and finance department and product department. We have domain-driven design team that are responsible for corporate onboarding, teams that are responsible for customer support, so expertise in customer support, expertise in churn modeling, expertise in domain-driven design. And within the group, there's a finance person, a product person, a technology person, a cybersecurity person, and this squad, this tribe is responsible for iterating very fast, and we measure something called rate of learning. Rate of learning is how fast can you launch products. Like, I think Facebook or Meta and Google used to launch thousands of controlled, randomized products in control groups per day, thousands, right? So that you can actually iterate and double down on what's successful. So we've physically rearranged our office so that there is tribes and squads, and every tribe and every squad keeps on releasing new features because their expertise in corporate onboarding, their expertise in customer support, card issuance, and then all of a sudden we have this incredible speed of launching things, and even if we're failing, we can measure the rate of failing on a weekly and monthly basis, which is very different than your traditional. You talked about culture and organization chart. It's super, super different to have an HR department, a finance department. And by the way, this happened at Amazon. There's the famous 2002 Jeff Bezos email that he sent to all of his employees. Again, you start a company, you're becoming successful, and success becomes your impediment for growth. Because the more successful you are, more you're going to hire people. The more you're going to hire people, the more you're going to hire lawyers and finance people and spreadsheet gurus and systems. And all of a sudden, as the head of this company, if you want a single piece of information, I bet you, retail people here don't know profitability per SKU, per location, per hour, or per weekend. This question alone.
And you do at Edenred.
Of course. And this question alone of profitability per service, per location, per seasonality, per any measure, is actually, in a retail environment, can take 6 weeks to actually stitch systems together so that you can actually create an insightful decision. That's the things that we've done, is that we've reorganized our whole organization to actually be around domains of expertise that we're good at.
Right. Well, I think in the next session, we're going to talk about the assessment of board members. And I'm glad that you're echoing my position, because one of the things that we do is look at, how are you structuring your business? How is marketing, sales, HR, finance, how are all these going to interact? And so many times, the board members are really flat. And, sometimes we're talking, board members from FTSE 250 companies in UK. And, they're spewing out all these buzzwords from ESG and all this other PC stuff. But when you get into the nitty-gritty about, what is your impact as a board member, the first thing we look at is that structure, because a good CEO and a good board will not accept a failing organizational structure. So that's interesting that you're echoing that. Vibhor?
So I think, obviously, a lot of digital transformation is happening, and most of companies are becoming agile. Most of companies are becoming tribe-led. I would just, since the flavor is Chinese, so I would just talk about a product launch that we did where we brought in Alipay into the UAE 4 years back, where there was a lot of Chinese consumers who were coming into the UAE. So UAE is a very unique market. If you see, 25% of traffic that comes in at our retailers and people who do commerce are from people outside the UAE, and GCC being a big chunk, but Chinese are also pretty big, and they shop at a lot of our customers like Altair, Shalhoub, etc. So we wanted to build this whole platform where we did not want to restrict the business to just your traditional card rails, but we wanted to open what we call alternate payment methods and global wallets onto our payment platform. And the first step that we took was to get to work with Alipay to build that. So that entailed getting an approval from the board in terms of what the it was an investment early, ahead of its times, which is why I was saying digital transformation is important, but timing of that is also very important. You sometimes are too early, or sometimes you are too late. So at that time, people did not even know whether these global wallets will be really used outside their home markets, and that's when we started building this platform where we worked with the regulator. Spoke with Ant Financials at that time, and we were the first ones to bring that capability into the Middle East. And we now have not just Alipay, but based on that first mover advantage that we had, we were the first ones then to bring in WeChat Pay, which is another wallet out of China. Last year, we were the first ones to bring in one of the largest payment methods in the world, which is UPI payments, which drives most of the transactions in India, including WhatsApp Pay, etc. So we co-created a product with NPCI in India, and we brought in those 800 million UPI wallets, which can now be used at our merchants, right? So because the investment was made at that time to make sure that we move away from traditional payment methods to these alternate payment methods, as that wave grew, we always had the first mover advantage. And we have been able to price that service better. We have better margins on that. And obviously, as it's scaled up, it has helped us not just from a margin perspective, but from positioning NeoPay as, one of the new age companies or companies who can get things into the market first and fast. And to the point that was made in terms of, what value it has, obviously it has tangible value in terms of P&L, etc. But if you're looking at potentially a M&A, if you're looking at raising money, raising an exit, obviously these decisions, these are some of the smaller examples, but decisions that are made at that time by the board and the CEO go a long way in how the company is looked at, how the company is perceived. Because when someone is putting money into you, they are putting money into a forward looking outlook of the company. And if you can demonstrate more successes than failures, to be honest, there are failures as well. I mean, if there are no failures, I think you're not trying. So the board needs to be bold, and if the CEO is bold, the board needs to support the CEO. We're stating that some of them would be successful, some won't. But on the balance, if you can deliver more successes which are high impact, then you are looked at as new age forward looking. To your question, when there are so many fintechs in the market, how do you differentiate? And sometimes people say it's just about the size, but size in the end in our space is a function of how you run the company. Because there have been instances where large global payments fintech companies have come into the region, have not succeeded and have folded back. And there have been regional companies who have become these big powerhouses who are driving business. So it's not always about the size, it's about strategy, it's about how you implement. So we have seen both examples, and those are some of my thoughts on that. Yeah.
Great. Ferris? I think Ferris has more access to data than anybody in the country, probably.
Well, no, I'm sure I'm not. But we do see a lot of trends, and I think there's some really low-hanging opportunities to start in the region. I mean, the Aleph Capital, the PE fund I sit on the board of, specializes in GCC businesses that could unlock value by implementation of technology. And there are so many of these businesses. We recently had an acquisition of the pet shop in Dubai, which is iconic. It's been around for like 75 years, multiple locations. I think if you have a pet in Dubai, you know the pet shop. No e-commerce, like zero e-commerce. They didn't have well-established businesses in the West, like a subscription business where we send you your pet's food on a monthly basis, even if you don't order it. It's so basic, but it unlocked the business. Now it's the fastest growing line of business. By end of year, it'll be the primary line of business. We have, to pitch a little bit, WhatsApp. I still am blown away when I need something and I have to call a phone number and go through an IVR. Like, it's so antiquated. Today, clients that have implemented BN Sports, 85% of their customer service happens on WhatsApp. Nobody wants to talk. Like, these are the trends that happen. We see them anecdotally. People in the region open their WhatsApp 150 times a day. It's the way to go. If you're not doing marketing on WhatsApp, if you're not doing customer support on the way people prefer to engage, then you're just setting up your customer for frustration. You're giving a leeway for someone else to come in. Here's a pitch that I got the privilege to hear about early on, and I myself didn't buy it. It's like, I'm going to go and create a chocolate. I can only make so many, and I will sell it only 10 minutes a day.
After 5, you don't sell it.
Yeah, no, 10 minutes. They open from like 11 to 11:10 or something like this, and it's going to be 65 dirhams a bar. Like, it's a recipe for disaster. Fix chocolate. It's the Dubai chocolate. When after it launched, I had calls from like very senior government members saying we need to protect them from copyrights and people like infringing on them. They are digital first, and now they're going into Harrods, and they have a section at Harrods in London now, the fixed chocolate. The giving movement. The giving movement started digitally. They went brick and mortar. I know some math people are in the crowd. I think the brick and mortar was a mistake, personally. I think they should have stuck to digital. They're doing fantastic. Again, they're not sportswear. They're not really wear. They're airport wear, is what I call it. It's the stuff you wear when you fly. But it works, and it's probably one of the biggest retail brands here. Karen was in eyewear, or Scott Wolf, which I think at this point is a global company, that also digital first. I would argue, the quality necessarily compared to like a Canadian Lululemon or something like that. But these things work. They keep their costs low. They're able to experiment because they don't have the brick and mortar, and they're able to expand beyond the reach of of just what is restricted with them with brick and mortar. So I think there are so many existing low-hanging fruit from every business that I have one of our clients that is the agent for one of the big brands, sports brands, as big as it gets. They had the brick and mortar, but they didn't have the online. And in the argument in taking on the online, because they were losing a lot of money to the online, the question became, can you handle online services? Can you handle today, if they give you the support for online, can you manage? You go into a whole different world of gray market stuff. People bought this in Pakistan, they brought it over, they're trying to exchange it here, all the way to the kind of volume you have to handle, the customer support. So I think it's a journey, but you need to start the thinking about it today. Because if you don't, I'll give you an example from Saudi, Al-Hukair in Saudi, which now is called Sanomi. Hukair is the biggest mall retailer in Saudi. They get 1 million people through the malls every Friday. 1 million people. Wow. 3 things happening in Saudi. There's a lot more entertainment. If you saw what's happening this week with the Eli Saab show, etc. There's a lot of stuff to do outside the malls. So it's no longer just malls. 2, the dynamics of e-commerce, so people are buying less in the malls. And so by the time they decided to pivot, it was starting to affect the rent at the malls. Like retailers are saying, we're not getting the foot traffic. It doesn't, So they tried to go e-commerce, but a bit late. Saudi is too unattractive a market. Everybody's playing in Saudi. The only solution they found is to buy 10% of the Trendyol operation in Saudi for $150 million. That's an expensive fine to pay for being late. Really expensive fine. And that fine will continue to grow as they try to acquire the rest of the business. So it sounds trivial, but I think it's existential for every business in the region to really have a very sound digital strategy. Otherwise, I think there'll be consequences to pay for board members.
I think also some of the board members talked about that impact of the board driving profitability. And so when we pick up a mandate, it's very, there is those mandates for board and chair of the audit, et cetera. But the chair is usually concerned with generating revenue and net profit. And I think if you're a board member, you're looking for your next role, you need to shift your dialogue and your value proposition to start talking about how, if you are obviously compliance risk, it's not the car with the best brakes that goes the slowest. It's the car with the best brakes that goes the fastest. So showing how that risk protocol has driven profitability, I think is going to give you that edge. I don't know if either of you, Ferris looks like he has to say something here.
I think it's a functional expertise like everything else. Historically, there was no need, to be honest. Like you needed stuff that could complement or supplement your expertise in-house. Or, as Shane alluded to, you need someone operational to implement the ERP system or whatever tech you have. What we're talking about now is a seismic shift of dynamics in the region, which you won't be capable to fully understand or scope as a traditional business unless you have someone at the board who understands how these things unfold. The timelines we talk about are also quite relevant, right? Like, I'll give you just as something we use just to put things in perspective. When the phone first rolled out, which was quite revolutionary to how we changed, it took about 25 years to hit 100 million users. Radio took about 20, TV took about 10, Facebook took about 4, then you have WhatsApp that took about 2. When we launched Threads, which is like our X or Twitter, it took us 24 hours to hit 100 million users. So when I talk about Temu, I'm not trying to put people feel bad because it happened very quickly. From the time you saw the first ad of Temu to probably those kind of numbers we're talking about, we're talking like 6 months. Like it's a very, very rapid thing. And then once you're in that situation, I think the CEO of Al-Hukair Sanomi, who's ex-Google, Mohammed, did the smart thing. Because at some point you have to say, look, as a company, we don't have the capabilities to move quickly enough to do this, so we have to pay that fine. And so I think this is why it's incredibly urgent. It's incredibly urgent that people start thinking this way, because it will happen so quickly that your next negotiation around your franchise or your next negotiation about what you thought was protecting the region is no longer there. If you talk to the Phillips Group, he's on my board. We said, yeah, we're coming up with our own brands. And that takes process. Like Unlike tech, coming up with your own, skincare line takes time. Tech can move quickly, but brick and mortar needs its rightful time.
Well, great. We're kind of on, I'm going to call Dr. Ashraf back to the stage in a second because we have our next panel to come up. But I really want to thank these three gentlemen. I think we heard from Wael the importance of getting the right structure and some very innovative way of how the teams are actually physically piecing them together. Vibhor, I think, gave us some good insights in the agility that's required and the speed at which your board is able to make decisions and bring in global champions from other regions. And of course, Faris, I thought it was really interesting how you talked about the importance of understanding the customer journey and those key milestones and using technology like the pet shop to capitalize on that repurchase conversion point, which is so often missed in traditional businesses. So if we could please give these guys a big round of hand, please. Thank you.